5 financial conversations that every Malaysian couple must have before getting married soon. Part 1. The current financial standings and debt disclosure. Try to disclose all PTPTN loans and credit card balances to avoid surprises after the wedding. Share your current EPF savings and liquid cash reserves for a realistic view of your combined net worth, and also to discuss existing life insurance policies and monthly commitment like car loans or personal financing. This might be a little bit tricky in a sense that some partners may not want to review entirely all their personal finances to one another, whereby this may pose a hidden danger where you end up being surprised by all this cropping up after the wedding. This is especially dangerous if you are not able to share your personal lives with one another openly. And by having your personal finances known by your partners, you'll be able to plan ahead easier, such as even for any sort of purchases or big purchases in the future like housing or even a car, for example. Now in part 2, the big day versus the long run. Set a realistic wedding budget that avoids starting married life in a high interest debt. This is very common for Chinese couples, for example, as the rental for the wedding venue, the wedding planners could easily take up a budget of 50,000 to 100,000 nowadays. And we have to be realistic that we do not want to wake up after the big night to find out that we have a debt of 50,000 to 100,000 ringgit to pay. Decide on the contribution split between both families and the couple based on the current salary scale. This is important to actually find out who is earning how much within the couple, and then how they can actually decide to split the cost. Prioritize the post-wedding emergency fund over expensive banquet upgrades and aesthetic trends. This is very important to ensure that you have at least 6 months of your monthly income to ensure that if there's any emergency that happens, this will be able to save you from long run. Part 3. Joint accounts and daily money management. Determine if you use a joint account for household bills or maintain a separate digital wallet. This is important to ensure that there is no quarrel to determine that who is paying for the household bills, etc. But if you also decide that to maintain a separate digital wallet, it is also not wrong. It's purely depending on mutual understanding. Assign specific responsibilities for recurring costs like rents, utilities, or grocery spending. This will actually make your lives easier in a sense that you take care of certain parts and your spouse take care of another with clear responsibility drawn out. Establish a no question asked spending limit for personal hobbies to maintain our individual autonomy. I would say this is actually a good suggestion because assuming if the guy has a hobby, maybe it could be fishing, it could be motorbiking, it could be climbing the hill, and they have their own hobbies. Of course, try not to be spending too exorbitantly on the gears, etc. with a limit. This is good to have autonomy so that you don't constantly have to question your spouse. Why are you buying this? Why are you buying that? Part 4. Investments, goal, and property ownership. So align on whether to prioritize buying a first home first once you get married, or to grow a diverse investment portfolio. This is important to ensure that if you intend to actually buy a property for your first home, whether you want to have it as a joint loan or as a single borrower. Discuss on the risk appetite for high-yield digital asset versus traditional ASB or fixed deposit. Within the couple itself, I would suggest that for the newlywed that they are planning to get together, try to understand what is each other's risk appetite when it comes to investment. If let's say the husband-to-be is a high-risk taker while the bride is actually a low-risk taker, this may have a conflict of interest where if one is more strongly opinionated, it may actually result in a quarrel. Then map out a 5 years timeline for a major life upgrade like a family car or a property renovation or even having a baby, so that at least you will be able to prioritize how much you would like to actually set aside for this major life upgrade. Part 5, family obligations and future planning. So try to actually discuss the amount for monthly allowance provided to respective parents and extended family. At least be open to find out how much is being allocated rather than to leave it as a question mark and then to discuss it later, which may result in a quarrel sometimes due to differences in value towards your family and also your extended family. Estimate the future cost of childcare and education savings in the current inflationary environment. Having a child is every couple's dream, or some may not want to have a child, but if you do intend to have a child, you will have to estimate how much is it to take care of the child until they are grown up. We will assume that until the age of 18 or 21, depending on the individual. So you have to plan far ahead for the child and start saving for it. Review the necessity of medical cards and life insurance to protect the surviving spouse lifestyle. This is actually one of the big mistakes that a lot of couples made, whereby they still rely on their personal insurance that they have bought while they were still single, and they actually forget that once they are married, they have obligations towards their spouse. And moreover, if they have a family with children, they have to think about what happens if the spouse, either one of the spouse passes on, unfortunately. Then how are they going to take care of that child's future child care, and as well as their savings for their education? So this is actually one of the important things that a new couple should actually discuss. So I bring to end of my presentation. If you feel that this is some of the important points that you can actually discuss on, feel free to actually leave your comment below. And if you would like to contact me for any inquiries, you can actually refer to the description below. Remember to share and like this video. Thank you.